This is the pound New Zealand on the 15, and I'm involved with a channel. I'm actually going to go and do the higher time frame analysis because this looks like a double bottom, but I'm going to explain why it isn't for me. So here on the daily time frame, we're clearly bearish here, and a couple of days ago we did put in a lower low, lower close, but then yesterday we put in an indecision candle, and I'm just going to draw two structure levels on at the close of the candles and also at the lows of the wicks. And if we look, we just haven't come down to the lower structure level. In fact, the lower structure level, if I'm honest, is as a minimum this level just here, or even this level and this level. And when we have areas this close together, we typically come down to test them. What we also have is the 190-100 psychological number, which we have not come down and tested. We've fallen around 12 pips short, and these act like magnets, drawing price action down. So it's looking like we're starting to stall here, and that's exactly what we're doing. We do have the RSI that just tapped the oversold there, so we want to be wary of that, but we haven't quite come down to test the closes of the candles, and so I do believe price can come a little lower. So with that in mind, I'm going to drop to the 240, and it looks as though we have a double bottom. Now, we didn't go massively oversold here. We went oversold at 23, and this double bottom does not happen at any type of structure that I would be interested in. So if we look left, you can see it just really priced, hasn't come down to the next level, which is lower down here. So instead of this being a double bottom, it could potentially be something like a low and tight flag. So we had a move lower, a pullback, a move lower. Now I'm going to treat this as a low and tight flag. However, I don't. Let's just drop to the 60 and take a look at this. You can see that we've actually been adhering to this trend line structure. I'm just going to clear this up a little bit. I'm going to put another structure level on down here at the closes of the candles. So we have the market that came down, we saw a pullback, and then we saw a move lower. I like it when we have a clean leg, so from here would be the leg for me. So we had a move lower like that. Minimum of 4 touches, 1, 2, 3 and 4, and we're back up in that zone now. Now it isn't my typical low and tight flag, just the formation of it. So I'm actually going to treat it like a low and tight flag, but I'm actually going to call this a channel, a structured consolidation, because look at what we did. We had support, support, turned into resistance, 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 and down here, support, support, support. Now within these channels we can have many opportunities to get involved with double tops, double bottoms, advanced patterns, head and shoulders, things like that. So what gives me more confirmation is when I drop down the time frames and I look for those things. Right here we had a double top. Right here we actually had a head and shoulders, so this was the left shoulder, this was the head, initial structure high, right shoulder, back up to retest. And when I start seeing these things, then it gives me more confirmation that that this is a channel and trendline structure could hold. I actually talk about this in the channel educational material on how to trade these, and these are all signs that we could be within a channel. What we also have here then is we actually have the market adhering to this other channel where we've come up to this zone, and we've already had a lower low, lower close candle, and I am allowed to drop down multiple time frames here, and you can see within that channel we've actually had already several double tops. So I'm involved with the trade using the 15-minute lower low, lower close candle just here based on the internal channel, and I've gone just let's have a look, just above these wick highs just here, and I'm playing for, if I go back to the 60, the closes of the candles based on the 60. So yeah, we can, I'm going to keep it there. I don't want to play for the very lows, and also I'm then playing for a breakout to see if we can get the breakout down to that 127 just there. So it does mean then, in terms of risk, 22 of risk here. Target ones, if we can get them, are 47, and target twos after front running are 89. I'm just going to go back to the 240. Yeah, we just haven't come down to those lows. So quite a small amount of risk here for a relatively high amount of reward, particularly if we can get the breakout. And we're back for the update, and we have had price now that rallied up and spiked me out. Unfortunately, this week is turning out to be a heavy week in terms of losses. Drawdown, it's been expected for weeks, but out of this trade now for 22 pips.